Hello again from Sprott Money News at sprottmoney.com. It's a new month. It's February 2023, and it's time for your first precious metals projection video of the year. I'm your host, Craig Hemke. Joining us is Chris Vermeulen of the technicaltraders.com. Chris, a little under the weather back in January, so we took January off and we're picking things up here in February. Chris, good to see you.
Hey, thanks for having me back, Craig.
Yeah, my friend, you missed a crazy month, but I know it's not like you missed it. We had quite a run there, really since November in the precious metals, and now here we are on Friday the 3rd. It looks like that little uptrend has come to an end. We'll get to that soon enough. But before we get started, let's do two things. One, remind everybody that these videos are courtesy of sprottmoney.com. So thank them for all this free content by going to their site, maybe checking out the deals they have on physical precious metal, maybe check out the offerings that they have in terms of storing that metal, or at least, if anything, smash the like button. Give them a like, give them a subscribe on whichever channel you're watching, just to help them cast a wider net. Chris, let's also tell everybody what you do on a daily basis at thetechnicaltraders.com.
Yeah, sure. At the Technical Traders, we cover the markets kind of like what you and I are doing here. This is the monthly outlook. I usually look at the daily and the weekly kind of shorter term views, but I cover all the markets, go through the technicals. I'm a pure technical analyst, and we try to catch these waves in the market that kind of repeat on a weekly or monthly or annual basis. And we trade the technicals using ETFs and focus on gold, silver, miners, the indexes, oil, all those things going forward. So what you and I are going to cover today is a high level kind of big picture view of what I do every morning for subscribers of my newsletter at thetechnicaltraders.com.
And it's important to note, you're a technical analyst. You're agnostic to any sector. You're just going to find, again, what you've always called the best asset now, and that's where you're going to look to move. Yeah.
So for a perfect example is the technicals, all the underlying strength has been in the markets saying, hey, stock market has got legs behind it. It should be moving higher. And, from a technical standpoint, we got long the markets, and there was a lot of people going, why are we getting in? What are we doing? And I'm like, well, the money's piling back into stocks here. We're seeing lots of growth in pretty much the stock market right now. Money's dumping in. And everyone who is nervous about the Fed and literally just going off emotions and news and what they think is going to happen got caught on the wrong side. And it just goes to show, if you follow the charts and the money flow, typically the price favors it. This happened last time. We got into a play about a week before the Fed last time. The Fed came out, the market got hit, but it only got hit for 2 days. It bounced right back and ended up taking off and hitting our upside targets. So if you follow the trend, even if the news is against it, it usually will support price and won't let it break down. It'll be a short-term blip. So that's the nice thing about the technicals. I can throw the news out the window, save myself a lot of time from that regard.
I wish I could. Anyway, hey, let's start there, because I've probably almost everybody watching us has exposure, at least in the U.S., to the U.S. equity markets, through their 401k, their IRA, their stockbroker, their financial planner has them in equities. And, we protect part of that with physical precious metal, but a lot of people, of course, for obvious reasons, are diversified across all asset classes. So it has been a crazy couple of days since the FOMC meeting on Wednesday. We're recording this Friday morning, the 3rd. After Powell got finished speaking, COMEX gold went as high as 1975. Mm-hmm. And now, not even 2 days, like 30 hours later, it's down $100. Contrast that to, let's say, the S&P 500, which is still significantly higher than where it was 2 days ago. That has to do with sentiment, that technical, the legs you talked about, it, you discussed. So let's start there, especially for the people that are in equities. What are you seeing? That relative strength in the stock market versus the precious metals?
Sure. Well, if we take a look at the NASDAQ, so this is my CGS strategy. This uses cycles, this uses money flow, technical analysis, all that stuff. And it's telling us the red bars mean naturally institutions, big money flow is going out of the market. And when when price breaks down and there's the money flow is in control on the outside flowing out, we get these red bars. When we have green bars, it's the opposite. The trend has changed from a technical standpoint. Big money is accumulating and moving back in. And so we want to catch these trends. And so really over the past year, the overall trend has been down. We're kind of in a full-on kind of bear market here. And during a bear market, most of the time, the market's going down. When we take a look at, what happened recently, we started to see the market strengthen. We got and ended up getting a buy signal in this market, and the NASDAQ really took off. I mean, we've been seeing growth stocks just rocket higher. All the ARK ETFs have been shooting up, semiconductors, pretty much what was at the worst, the bottom of our best asset now list. So like the worst assets now, those are now at the top. Everybody's piling into the growth stocks. And everything that was at the top, like utilities, consumer staples, healthcare, like the defensive, boring things, they're all at the bottom of the pile. And the NASDAQ's a good view. We've really seen the market pick up, take off, and it continues to move higher. We've already hit a first target. We're really seeing this big momentum shift in the market. And so if you take out all the news, this is the type of analysis that I see. So as you know, I haven't watched the news probably going on 8 or 9 years anyway. I don't read the paper. I don't listen to the news. I don't even listen to the radio in the car. So I'm just totally focused on the charts. And so when you just focus on price action, this is what the chart tells us. If we look at the big picture of the market, so this is the COVID crash on the top here, the weekly chart. When you're in a bull market phase, most of the time it's favorable to be in the stock market with our shorter term CGS strategy on the bottom. When you get a sell signal and we're in a bearish phase, you'll notice most of the time the market is red. And this is the point I'm trying to get across to a lot of people right now is we're not right now in a phase where you want to be holding stocks. They're having a nice rally. I think we're in a complacency move. But these rallies are generally going to be very short-lived. And the phase that we're in right now in a complacency rally is typically when precious metals have their best run just before everything kind of falls out of bed and everything sells off. So we're in this kind of really last kind of leg that could last a few weeks, could last a few more months of the stock market drifting sideways or higher. But when it rolls over and breaks down, we're going to see that reset that you and I have talked about, Craig, of precious metals potentially having a big correction, resetting, and just giving everybody the prime opportunity to get in before I think there's going to be that later half of this super cycle that we're in. And this pullback in gold and silver that I think is coming is perfectly normal. We saw it in 2008, 2009. Everything fits in line with what we've seen in the past, how metals move during a bear market in stocks. So all this is really starting to queue up. So that's kind of like the high level view of what I see in the market. And of course, if everybody's now piling into growth stocks, they're moving out of whatever was defensive before. And you can see here's gold, 2 massive red bars to the downside. Yeah. If we look at silver, down 5% as you and I are talking, it's breaking down from this, what looked to be a beautiful bull flag, but it is now breaking down with huge volume. And when we look at the gold miners are out of favor. They're having a pullback, a correction, because they were the leaders. But now that everybody's piling into technology, they're moving out of what was defensive before and into the growth. So I still think gold, silver miners are going to probably rebound and they could potentially go higher still. They're just out of favor with the Fed in the quick news. I think there's some rebalancing going on. This could be a very interesting opportunity, a low for metals and miners. I think they could go higher over the next couple of weeks. So it's just the market rebalancing and trying to figure out what's going on with the Fed and the news and the outlook, right?
So in terms of stocks, excuse me, S&P, NASDAQ, maybe some more upside, but you're not like ready for new all-time highs just yet.
I don't think the market's going to go to new all-time highs. When we look at the SP 500, we've got this falling trend line, had a beautiful break. We're starting to move up. I still think we could see this market from where we are. There's potential. It could push somewhere, another 6, maybe even 9, 10%. So there could be a very significant rally. For all we know, I mean, the market could roll over tomorrow. So the key here is we find out when the trend is turned up and everything is supporting it, and you want to ride it up, but you need to manage positions because this market can roll over. If you don't lock in gains, move your stops up, you're going to end up holding onto a loser. You'll turn a winner into a loser. So we just have to be very aware, because I do think this market could roll over anytime and just go into a nosedive. And as you know, there's not that much liquidity really in the market. When people get scared and the selling hits, I mean, the market just collapses. It's like a waterfall sell-off, and it could be pretty gnarly.
Yeah, it's the analogy I used to use. Where I grew up in Nebraska, there's a river called the Platte River, and it's about a half-mile wide and about 6 inches deep. And that's a lot of what the liquidity in the stock market is like, especially when it's all done by computer. And so as we, or so much of it is at least, let's transition that then into the dollar, because in this sell-off the last couple of days in COMEX gold futures is down $100, like I said, but $70 of that has been in the first 90 minutes of trading yesterday, Thursday, and today, Friday. And most of that is just a reaction from the algos, the HFT trading machines, to seeing the dollar move higher. Mm-hmm. And they all headed the exits at once, and down we go. So there's $70 of the 100 right there in the first couple hours. So obviously the dollar is a big driver here in this computer world.
I think so, for sure.
It's not a perfect correlation, but it's going to drive the machine. So the dollar has been trending lower, as you can see there. Really consistently since November, and gold's been trending higher consistently since November.
Yep.
Let's start with the dollar, though. Kind of like it did back in early January. It's peaking up above a downtrend line. It's getting above whatever that purple line is you have there.
Yeah, 20-day moving average.
Yeah, it's not to its 50-day yet, but it's above the 20. What do you see? I mean, is that kind of a washout reversal low back on Wednesday, and now boom, headed higher, and to where? Or how do you interpret that chart?
It's tough. I think we need another week or so to figure out if the Fed pop in the stock market is just that, a pop on news that's going to get reversed and stepped on. And if that's the case, if we see stocks start to sell off big next week, the dollar, I think, is going to blast through the 50-day. And have an impulse move to the upside and kickstart a new trend. At this point, I mean, we could very easily still see the dollar kind of pull back and chop around in a big range, and the stock market just kind of keeps grinding higher. But this strong pop in the dollar, if it gets some legs, I mean, I think it's going a whole lot higher. The last time you and I spoke, if we look at the monthly chart, it's a really good view, I think, of where I think we could be headed, which is the stock market breaks down later this year and money flows back into the dollar, and we see the dollar go back up to the highs, or potentially even higher, back up into these highs back in 2000. And then the dollar puts in a major top. And then eventually, when it starts to break down from that phase, probably even when the dollar is up at this level, that's when gold and silver miners, I think, will put in a major bottom. They'll start to rally first. And then, of course, I think we're in a very similar situation from a chart standpoint, and the value of stocks and real estate versus commodities. We're very similar to the 2000. And then we went into a multi-year drop in the dollar, which led to a multi-year rally in gold. And I think we could just simply rinse and repeat and see something similar like that again, where the dollar just falls right out of favor. But I think the dollar's got a lot more power behind it. I think this is the first sharp pullback. We've seen it happen over here before. Very sharp pullback in the dollar, a big rally, another big pullback. We even had a really sharp pullback way over here. Doesn't look like much because we're zoomed way out, but these are huge, sharp pullbacks. And this here is the first kind of real pullback after breaking out of this giant kind of bull flag pattern. So there's a lot more upside. I think that's going to create a lot of pressure on metals. And of course, if that happens, it also means the stock market is probably in like a stage 4 decline, which to me it's a bear market, but it's actually more of like a financial reset. It's more than just a correction. There's going to be mass selling. It's going to change the way everything is. I think it's going to change a lot of people's lives because of the correction size that could come into play. I think the stock market could pull back still about 37-40% from where we are right now. So it's a huge potential crisis. We saw this back in 2000 with the multi-year bear market. We saw a crisis like this happen, or sell-off like this in 2008. And then I think we're going to have another one. And I don't, time heals all wounds. A lot of people have got into the markets. They've never been through one of these yet. And those who have been through one in 2008, they still remember it. But people get lazy and they don't protect their gains. And I don't think people realize how close we are to something being so bad that could last many years. I think it could be a big drawdown on retirement accounts for 3, 4, 5+ years. 2000, we saw this setup happen, and the SP 500 didn't come back for 12 years.
Yeah.
That is a long time.
Right. All right. Well, let's close with gold. And I want you to look at all the different durations on the gold chart too. I've been asked just again yesterday in an interview, what would invalidate, I'm bullish because I think the Fed pivots by summertime, starts cutting, I think you could draw analogies to 2010 and 2019. And that's what I've been writing about all year so far. But I get asked, what could upset the apple cart? What could make prices fall instead? And I said, well, come up with some economic conditions that spike inflation. Inflation goes back up rather than falling. Mm-hmm. And by extension, the 10-year note goes to 5% rather than 2.5%, and the dollar goes back to 115. Come up with that? Sure. Yeah, we're going to have it. It's not going to be very much fun in the precious metals. So here we are. I mean, the last couple of days is it just a warning shot? The trend up from November has clearly been broken. But I'll shut up. What do you see?
Yeah, so there's a couple scenarios here. Obviously, it's had a very strong run. You could argue here it's flagging in a big bull flag pattern. Yep. Which is what it did over here. We had a huge run up. It flagged out here in a pennant or bull flag pattern. Whichever way it breaks is going to be, I think, a doozy. It's going to be pretty exciting, no matter how you cut it. But gold is trading up at these lofty levels, and I see gold more as kind of the global asset. A lot of people around the world buy into it. So it's supporting price better. Now, if we were to take a look at, for example, just gold miners, let's take a look at GDX and zoom in a bit. I mean, GDX is nowhere near the highs we saw back over here. And more so, what's more important here is gold would be equivalent to trading like up here right now. But really, we're just seeing declining highs on the stocks, declining lows. This is a full-on downtrend. And really, it's kind of come right into resistance through all of this noise right through here, all these lows and kind of this level. So, this is where we're in this complacency rally. To me, this is just it's a bear market rally in the miners. And if the stock market starts to sell off, even though the scenario might paint a really good picture and the economics might be good for precious metals and miners, the problem is when selling hits and liquidation starts to kick in, it pulls everything down. The stock market is like the ocean. When the tide's going down, almost everything goes down with it. And of course, I think it could pull miners and gold back down. And of course, I think the rising dollar will help fuel that sell-off. So, it's not the rosiest picture, but again, when you and I look at the big picture here, as a long-term investor, we're in a scenario just like this right here, this type of scenario in terms of, I think, where the dollar is pretty much headed or where it is. I think we've already kind of had that scenario. So I think this market could correct sharper than people want down into the 14 range, but then it's going to take off and we're going to see really, really exciting numbers. Who knows where it'll top out, but the last rally was pretty darn significant. And I think it could happen again. So it's just a matter of kind of waiting it out as a short-term trader. We're long miners right now. But looking forward, as soon as it rolls over and the downtrend starts, we're going to be out of miners, and we probably won't get back in until later this year or 2024 potentially for a real kind of best asset now for that multi-year run. So that's the way I see it, which is quite different. You're really, really bullish. You're into the more economics, all those things, where I just kind of block that out and just look at the charts. And I get a bit different of a view.
Sure, which is fine. Which is exactly, I
Yeah.
mean, and that's anybody watching us has to take all these things into consideration. What you're tremendous at is just looking at the technical stuff, like you said, not reading the paper, not watching CNBC, and just simply going with what the chart is telling you. And there's some real value in that. Chris, again, thetechnicaltraders.com is where everybody can find you.
Yep. Yep. I also opened the doors to, which I haven't run for a couple of years, which is the goldanoilguy.com, which almost everybody knows me as, because I see this opportunity in precious metals coming back. And this is what I did back in 2008. I ran the Gold and Oil Guy. We had an amazing run. I saw the precious metals run starting to happen or about to happen. Very similar setup. I think the stock market's about to crash. Precious metals are going to be one of the first to bottom. And I think we're off to the races. So I actually have a short-term momentum strategy with the Gold and Oil Guy service. I just opened the doors this week because there's a lot of opportunity. We're able to catch these big pops and drops in gold and miners and silver. So we're getting back into that point. I think, late this year, some point is going to be that opportunity of a lifetime for people who get into the miners and the precious metals. We just need to wait for that final kind of washout low or wait for the breakout. And get on board, right? So we're close, which is why I'm starting to hone in and focus on the sector a little bit more.
What's that URL, Chris?
The goldandoilguy.com.
That's gold. That's a very short, I mean, what, 1 4-letter word, a bunch of 3-letter words. How can you mess that up, right?
Yeah. The Golden Oil Guy.
There he is. I like. Ooh, nice logo too. All right. Well, let's wrap up there and see where we are next month when we get back together for the precious metals projection. As Chris points out, though, your final shot of the screen is it's almost Valentine's Day. What the heck with the candy and the roses, right? Gonna eat the candy. The roses are gonna wilt and die. Gold never goes anywhere, right? It's perfect. Yeah. So stop by sprottmoney.com. Get your sweetie some gold or silver, either one. And remember, sprottmoney.com. 888-861-0775. All right, my sweetie is Chris Vermeulen, man. It's good to see you back on your feet and rolling. And I look forward to talking to you again next month.
Yeah, same here, Craig. Thanks. Take care.
All right, buddy. And from all of us at Sprott Money News and sprottmoney.com, thanks for watching. And keep an eye on this channel for some more content as we go through February.